As this housing market sits at a standstill, I keep looking in the data for signs of real chaos. If you've been watching these videos each week, you know that inventory started climbing in early September when mortgage rates spiked over 6%. With buyers frozen out, houses have been sitting on the market, and so any new listings have just been adding to the active inventory. This week, though, inventory ticked down. It's bucking the trend of the last 2 months. We may have finally seen the peak of available inventory of homes for sale for the year in November of all times. Our inventory, though, could resume its climb next week, and that would be, one of those data points to further chaos. Every week, Altos Research tracks every home for sale in the country. We analyze all the pricing, the supply and demand, all the changes in that data, and we make it available to you before you see it in the traditional channels. If you aren't using Altos market reports with your clients, your buyers and sellers right now, it might be a good time to step up. Go to altosresearch.com and book a free consult with our team, because everybody is worried about the market right now. They need you to help them see clearly. The data we cover here in these videos is national, but Altos covers every zip code in the U.S. So join us, dive in. I'm Mike Simonsen. I'm the CEO of Altos Research. Here's what the data looks like for the first week of November 2022. This week, available inventory of homes for sale ticked down a fraction to 575,000 single-family homes unsold on the market. That's our first decrease week since August. In August, when mortgage rates were in the fives, people were buying some homes. Since then, the rates spiked over 7%, and so inventory has been climbing late into the fall. This has, of course, been very unusual. And it's a pretty bearish sign for home prices in 2023. This week, though, inventory finally ticked down again. So is that it? Have we peaked for the year? So I'll show you in a minute why inventory actually may not be done climbing for the year. Pretty close, though. This week, with 575,000 homes on the market, that's 44% more than last year at this time, when there were only like 400,000. Inventory is still 37% fewer than even in 2019 nationally. And that really speaks to a big difference in local markets. The big pandemic boom markets, they've all cooled back to really at least 2019 inventory levels. So while the Central and the Northeast have not had notable inventory increases so far this year. So we'll spend some time with the local and regional differences in our hour-long webinar this Wednesday, the 9th at 10 a.m. Pacific. We'll look at all the leading indicators and how things are set up for 2023. We already have like 1,500 people registered for that, so you can actually still reserve your space to join. So click the link in the description below. These are limited to 1,000 attendees, so you have to register and then show up on time to get your spot. Click that below, and we'll take an hour to look at all of the data around the country. One of the things we'll cover in that webinar is the inventory outlook for the rest of the year. So we're at 575,000 single-family homes right now on the market, and we expect about 520,000 by the end of the year. Last year at this time, we were at 400,000 on the market and ended the year at 310K. So that's the light red line here. We were only at 400,000 last year at this time, and then it curved down to 310,000 by the end of the year. In 2018, for example, there were 939,000 single-family homes on the market at this point in November, and the year ended with 847. So our projection of 520 by the end of the year is significantly slower drop-off than most years, but there will still be fewer people selling their homes over the holidays, so inventory falls. The dotted line here is the projection through the end of the year. Interestingly, the inventory model predicts basically flat inventory between this week and next. And since the model has been underestimating inventory growth since the rate spiked, that could mean that we're actually looking at an uptick next week. So the model predicts flat, but the model's been undercutting it each week. So for example, this week, the forecasting model expected inventory to fall by 9,000 homes, and inventory fell, but by only 2,000. So normally this coming week is one final gasp before, for listing a house before the holidays, a few folks who need to get it on the market before the end of the year. So we could have an uptick in inventory in the middle of November, which wouldn't that be wild? So even though our new listing rate is really, really low, our sales rate is even lower. That's why inventory has been growing, even though, there are not a lot of new sellers. So in this chart is of pending. So these are the homes in contract, not yet sold, but no longer active on the market. There are fewer homes in contract right now than at any point since the early pandemic. That's including Christmas and New Year's times. So the number of single-family homes in contract fell by over 4% this week to roughly 325,000. The count of homes pending contract falls. That count falls when sales complete, or the deal falls apart, or when fewer new sales are happening, new contracts are being written. So in this chart, the dark red bars here count the count of the homes that are already pending in the contract process. The light red are those that went into contract this week. And with just 50,000 new pendings this week, that's the fewest since January 1. And it's going to keep dropping. So we have 29% fewer homes in contract right now than last year at this time, 29%. And you can see how rapidly the pendings number is falling at the right end of this chart. So meanwhile, the median price of single-family homes in the U.S. is $425,000 now. That's actually flat week over week, but it will keep dropping through the end of the year. You can see the dark red line here still needs to adjust down all the way into January. And it's going to be in January. That's the time when we'll see if there are any buyers at all for 2023 and if we get any price appreciation at all like we normally do in January. The price of the newly listed cohort, those are the homes that hit the market this week, that's the light colored line here, that pulled back 1% this week. And you can see a steady, pretty steep decline in the light red line here at the right end of the chart. It shows us that anyone who is listing their home today is doing so at a big discount to where they would have listed early in the year. We will look more at this leading indicator, these new listings, and what they tell us about future home price transactions. We'll do that in the webinar on Wednesday. The other leading indicator that we're watching, of course, is the price reductions. The currently over 43%, so 43.2% of the homes on the market have had a price cut from their original list price in the last few weeks. That's up from 42.9% last week. So many have had multiple price cuts. Price cuts are still climbing. So they are decelerating a little bit maybe, but they're still climbing. So every week that price cuts keep climbing, now, this late in the year, that's a more bearish signal for where future transaction prices are going to happen. House is on the market now, and if it doesn't get offers, that has to do price cuts. And so the eventual transaction price is going to be lower. So many of the pandemic boom markets have over 60% of the homes on the market with price cuts now. So we're talking about Boise and Austin and Phoenix and Vegas. Like those inventory is changing in those markets. And like the inventory in the central and the Northeast aren't nearly in as much pain with price reductions as they are in those Sunbelt pandemic boom states. So we will review the local markets with price reductions during the webinar on Wednesday too. There's a link to register for the webinar in the description below. Like I said, these are limited to 1,000 attendees, and we have way more than that each month who want to attend. So click that below to reserve your spot, and then show up on time to get one of those 1,000 available seats. As always, if you need to get your local data to your buyers and sellers right now, you should join us at Altos Research. Go to altosresearch.com, book a consult with our team, and learn how to interpret these crazy signals in this crazy market for the people who need you to do so right now. So they need you to be the expert, and we look forward to working with you most. So that's all the time we have for the data this week. More next week.